Hey, what is up, guys? It's Chris with Crypto Profit. Today's lesson is going to be talking about support and resistance lines, what they are, how to use them, and how they can help you become a better trader so that you can take higher probability trades. So there's two different types of support and resistance lines, major and minor. And the way we identify whether it's a major or minor, major would be anything in the macro scale. Macro means longer term, so anything in the weekly and above. Minor would be anything in the micro scale. Micro means a little bit shorter term. So anything in the weekly below. So I like to use three different time zones. I like to use weekly charts, and those would be my major or my macro. And then I like to use the 4 hour. So this would be minor or micro. Remember, shorter term. And then my last and final one, 15-minute chart. Okay. And I like to color code mine so that they contrast. So it doesn't matter whether I'm in the 15-minute or in the 4 hour. I can easily identify whether it's a major or a minor, and that will give me enough information so I know if I should stay in the trade or if I should pull out. So generally there's three different ways that you can actually trade support and resistance lines, and I'm just going to go ahead and show you guys a textbook example, and then we'll come back onto the charts and then we could see real life examples on how the market behaves. So I want you guys to think as support and resistance lines as a floor and a ceiling, and like if we were in a building, okay? So support would be your floor. So think about if you had a bouncy ball and you let go and you dropped it, what'll happen is it'll touch the floor and it'll bounce back. Same thing will happen with the markets. Where we're going down, we'll touch the support or the floor, bounce up, and then continue to go in the upward direction. Now resistance, I want you guys to think as the ceiling, right? If you grab the bouncy ball and you throw it up in the air, it'll get rejected by the ceiling, and the market will do the same thing. Where we're going up, we touch that resistance, get rejected, and then continue to go down. The last and final way would be a breakout. Now I want you guys to think about it if you're in a building and if you took the elevator and you went from the first floor to the second floor. So what happens is you break out. Now that old resistance becomes new support. Or if you went from the second floor to the first floor, right, that support becomes now resistance. So that's technically what happens. And the way we identified if we actually had a breakout is if we have full body candle formations either above or below that support and resistance lines. So that's why it's called support and resistance, because it'll either be a floor and we'll bounce, or it'll be a resistance and get rejected, or we'll break through, kind of like if we're going in the elevator and go from one zone to the other. So that's why I want you guys to think about support and resistance more as zones instead of concrete numbers, where if we break through, we'll go from the first floor to the second floor, from one channel to the other. That way you guys become more profitable traders. I don't want you guys to be rubbing the crystal ball and think we're going to 5,000 or we're going to 500. I want you guys to take it like in a building, zone by zone, area by area. You can't just go from the first floor to the third floor. So why would you do the same thing with trading? Area by area, zone by zone. That's the way that you should be trading. So now I'm going to show you guys how to draw up your support and resistance lines. And it's fairly easy. The way you do it is that you just touch yearly lows and then you draw them up. So as we see here, you broke through, right? And then this was the new low. This was the new low. This was the new low, right? This was a new low, and I drew the line right here. Notice how it is exactly at the same spot as this line is at, new low. And the rule of thumb when it comes to support and resistance, the more lines or full candles that touch the support and resistance, the stronger it is. Okay, so now let's go and look at an example of a bounce or it hitting the floor. Right, what happens is it goes here, it touches the floor like the bouncy ball, bounces up, and it continues to go up. Now let's go ahead and look at an example of the pullback. You throw the bouncy ball up in the air, it touches the roof, gets rejected, and it goes back down. Now let's look at an example of a breakout, right? So remember the elevator in the building, we go from here and then we go down and we go from the first floor down to the basement, right? So we go from this channel to that channel. And remember, the way we identified is that if there's full body candle formations either above or below the line, and it can go up or you can do the same thing going down. Okay, so notice how we went from this channel right here, oh man, to the other one, right? You don't just go from here to here, right? You always tend to go either slowly, right? So same thing when it comes to trading. All right, so now that you guys kind of understand how to draw your support and resistance lines, I'm actually going to give you the most important ones because those are the ones that the areas you're going to be trading. This line right here is going to be placed at 4,600. This one will be at 36, and this one will be at 32. And I want you guys to practice drawing your own support and resistance lines, and then to compare how I draw them. Right, so these are the ones in the 4 hour. Remember, you don't have to use the same colors, but do color code them, that way you understand. And an organized entrepreneur is no entrepreneur at all. You need to be able to easily identify whether it's a major or minor, regardless of what skill you're at, so that way you know if you should keep the trade in or you should pull it out right away. And on the 15-minute scale, I only like to use 2. And the reason is that the way the market moves is only goes in one direction, just like in the building. You either go to the next floor up or to the next floor down, right? And the way it'll happen is that the market will decide to either go up or down. It'll be in that floor for a while, and then it'll decide if it needs to go back up or if it needs to go back down. So this right here is called capitulation. So it just means that it's going around in that horizontal channel. So think about it, if you're in the first floor, no matter where you go, you're still in the first floor. So that's the way the market behaves. So what will tend to happen is that we'll have a giant rise up. We'll be in that floor that we decide to be, bounce around it for a day or two, sometimes a little bit longer, and then the market will make up its mind and it'll decide if it'll continue to go up or it'll continue to go down. So that's support and resistance. And now that you guys understand, practice drawing your support and resistance lines and have a hypothesis thinking about whether you think it's going to go up or you think it's going to go down. And then just tune into the daily live streams and then see whether what you thought was going to happen is the exact same thing that I thought was going to happen, and if it's the exact same thing that the market decided to do. So as always, remember to have a great day, trade responsibly, use proper risk management, and thank you for tuning in.